Firstly, what are company warrants? Well, company warrants are issued by the company and allow holders the right, but not the obligation to subscribe for new ordinary shares at a predetermined price for a set length of time. Our choice of the company for the warrants is Farm Fresh Berhad. Farm Fresh Berhad is a vertically integrated dairy company that farms, manufactures, and distributes dairy and plant-based products in Malaysia. Farm Fresh Berhad, funded by Khazanah Nasional Berhad, debuted on Bursa Malaysia's main market in March 2022, dubbed as the country's next large listing. For the pros, Farm Fresh warrants are an excellent long-term investment option because of their impressive long-term growth and the fact that stock warrants can last up to 15 years. Their aspirations for continued growth will eventually boost their market share within the company. Thus, based on the news from the New Straits Times in 2022, Credit Suisse has initiated coverage on Farm Fresh Berhad with an outperform rating and a target price of RM2.10. Leverage is one of the potential cons in investing in Farm Fresh warrants since warrant has leverage, which means that tiny changes in the value of the underlying asset cause larger changes in the warrant's value, which this can be harmful to investors because leverage risk increases their losses when asset values fall. Assuming that the share price falls by 40 cents in this situation, as the share price would drop by 25% while the warrant would lose 66.67% of its value. As a result, leverage can be quite dangerous in terms of investing in Farm Fresh warrants.
Alright, moving on to the types of warrant available for Farm Fresh. There are two types, which are call warrant and put warrant. Call warrant can be defined as a financial instrument that grants the holder the right to purchase the underlying stock shares at a predetermined price on or before a certain date. Next, put warrant is a listed security that grants the holder the right but not the obligation to sell the underlying asset at a predetermined exercise price within a predetermined time period. Moving on with the valuation of warrant, there are three types of calculation. Firstly, for the theoretical price, it can be calculated from the formula given. The difference between the share's market price and its exercise price is intrinsic value. So the intrinsic value of a Farm Fresh warrant on April 29 is 10 cents. Because the exercise price is less than the market price, the value remains in the money, which determines undervalue. Next is warrant premium in RM and percentage. The warrant premium refers back to the warrant's ability loss. As it can be seen, the warrant premium is in negative for both calculation. If the warrant premium is negative, the buyers are recommended to buy the warrant due to the fact that the warrant is undervalued. Generally, the price will upward push quickly because the warrant simply had long period to move and investors will possibly speculate may even pass better than the marketplace rate on 29 April.
Moving on the relationship of company warrant with the performance of security market. Here is how warrant was affected with the market performances. The first one is gross domestic product and derivative instrument. The most recent GDP figures have given the country new insight into the direction of the economic recovery. The Malaysian economy is expected to increase between 2021 and in 2022, as shown in the country yearly growth forecast. The state of the GDP can have a considerable impact on the price of warrant. For instance, Farm Fresh issuing of GDP-linked warrant will generate price variation such that when growth rates were maintained below the minimum growth rate of 3.1%, price volatility increased. However, when growth rates were maintained over the minimum growth rate of 3.1%, price volatility will decrease. Next is inflation and interest rate to warrant prices. According to an SSX report, warrant price were shown to be significantly influenced by changes in interest rate. Assume Farm Fresh has issued a warrant. When interest rates are high, investors might save money by purchasing call warrant rather than put warrant. Moreover, it is more difficult to achieve a break-even point by selling warrant at a higher price. To put in another way, the price of an asset is directly related to its warrant value. And finally, supply and demand to warrant prices. The higher the possible warrant price, the more volatile the underlying instrument is. It is because the underlying price has a better chance of rising than the exercise price of the warrant. Consider the fact that Farm Fresh has issued a call warrant. Consequently, an increase in the price of Farm Fresh call warrant is probable following an increase in the price of the underlying asset and strong implied volatility. To conclude, warrants are clear, transferable certificates that are typically more desirable in medium to long-term investment program. These frequently high-risk, high-return investment instruments are underutilized in long-term plan, but can give speculators and hedgers an appealing alternative.